I'm going to warn you, after watching this video, you might stop trading, at least for a while, but you're going to do it on purpose. It wasn't until I started using this 3-step hack, I went from a losing to a profitable trader. And I recommend that you stop trading and start back testing these 3 steps so you can have the same success in your trading today. I'm going to go through that first step right now so you can understand what you need to do to become a profitable trader. So this first step, we're going to go through the trading range and why it's important that you need to understand where price is within. If you don't understand which range you're within, then you're going to struggle to understand where price can go next. Now, the simplest way for me to demonstrate this is on this current pound US dollar chart. I'm going to go down to this area here and we're going to track and see exactly why price moved up here like it did. Now, the first trading range we're going to look at is going to be this move here to downside. We've got this swing high to this swing low here. That is a current trading range. So we can see the market create a nice bearish move to downside. Now at this point on the chart, we need to look left to see where price is heading down towards, because we can also be within a larger trading range. So if we look further back in time for this current swing low is, we can identify that the market went below this swing low here. So if we mark off a level right here in the charts, once we see price going below a swing low, this could potentially show you a reversal of the market. Now this is something you're going to learn later in step number 3. So make sure you continue watching to understand how you can use a reversal in the market. Once we identify this is our trading range, we then need to understand that we're trading within the high of that move here and the low of this move here. Now we can't mark this low out until we start to see price continue to pull back. Now we understand this is the current trading range. And we can then understand as well, if price removes this high as we did here, your next trading range is going to be from this swing high here in the market. And when we can close through this level, we have a new swing high here, which would be the next trading range. And you can understand here that the market continues to break through. And when I say break through, close through those levels. Again, here we close through. Looking back in time, we have another trading range high from this area here, now to this low. Now we go back to price. And we can see this is where price has to yet take out. So now we're inside this swing high to this swing low. Now that's how we look at the trading range within. Now we can also look at a trading range on a pullback. So when we see this market here pulling back to downside, within this move to downside, you can also look at this as a trading range. Understanding when we get a reversal here, we've got an area of imbalance here in the market, which has been left over. And this area of imbalance is what we expect the market to want to fill. So we're understanding the market is going to come back to this imbalance. And when we eventually close through that imbalance, we continue higher. Now, more of this will come into the next section of this 3-step strategy and how you can use the imbalance levels and the imbalance zones to understand where price is going to go next. Now, when we look at the entry area here, there was a great entry down here that we could have caught all the way up to this level. Now, more you'll understand on this coming at the end of this video in step number 3. So make sure you continue watching to understand how all 3 steps will work together. So that's simply how we look at tracking the trading range as price continues to go higher. Now, obviously on the way up here, we have this swing high to this low. That is a current trading range to the upside. And again here, this swing low to high is another trading range. So when we're looking at the market creating a reversal to downside here, we would have been within the trading range from this swing low to this swing high. Now we wouldn't understand that as a trading range high until this move here was to the downside. Once I've seen this, then I've got a trading range from this high to this swing low. That's my current trading range. Once we close through that trading range and this swing low as well, we come to this swing low here. And that's how we would look at tracking price through those ranges. Now, a closer look at this area, let me just quickly demonstrate exactly what we'll be looking for. When we see this market falling down and we see a breakthrough this level here, that indicates to me that this trading range of this low, okay, to this high here is likely to be taken. And you can see the market does push through this trading range low. We pull back a lower high. So we made a lower high, and then we break this low, we make a new lower low. What does that show me? It shows me a shift in trend. Now, once you go through to the next step, which we'll go through in a moment, we understand what these levels all are. You can see price actually comes to this level. We spike through, we hold, we make a higher low, and we push back up to do what? To come through this swing high. This creates a manipulation in the market, and there's more manipulations in my Forex Masterclass course, and we create a reversal here, and down the market goes once again to this level. Now, once we break through this level, we continue to the next level on our chart, and the next level is going to be this level. And again, the market breaks through, and then we look for our next area, which is going to be this swing low. And again, we break through to the next swing low, which is here. We close through that swing low, and then we go to this level right here. Now, the market hasn't yet come to this level, and what we're seeing here is a reversal to pull back to an area to sell off. Now, what you're going to understand in the next coming step is why we're going to be looking for these levels to actually impact our decision when we're going to take a trade. But what actually happens here is the market comes back up and manipulates this high, takes this previous high out. We create a reversal pattern here. Again, you're going to learn that in the last section of this video. Then we can create the move back down to where, look at this, guys, to this level, to the pip. We wick through, we pull back for another lower high. Okay, where's the next level? Once we close through this level, okay, we bounce off it again. We bounce off right there. We nearly close through. See forward, and there's the close through, and we go for that low of the range. That's why it's important to understand where your trading range is. Now, I've gone through this chart quite quickly because I've got a lot to go through in this video. Now, of course, this is a simple technique once you understand it. And what I suggest doing is going back through, watch this first part of the video once again if you're not absolutely sure. Now you've been through that first step, understanding the trading range and how it's so important before you do anything else in your trading. Now, the next two steps are going to go with the trading range to give you a full breakdown of how you can find highly profitable trades and know firsthand where the market is going to go. Now, we're going to go straight over now to that second step, which is going to be the use of understanding the imbalance zones and, more importantly, the origin of the imbalance zone. So let's head over now to that next step and how you're going to use that with the trading range. So let's now actually look at step number 2, and that's understanding the origin of the move when it comes to an imbalance zone. Now, let's just remove everything off the chart. I'll go closer into price and I'll just show you exactly what the imbalance zone is. Now, an imbalance zone is going to be where we see price leaving an area where there's no sellers in the market on an up move and there's no buyers in the market on a down move. So we look at this bullish blue candle here. We can mark off an area between these wicks on the candles where there's no sellers in the market. This shows me that there's only buyers coming into this market. And the same is said for this bearish candle here. We can identify with those wicks, there's an area in between, there's a gap in the market where there's absolutely no buyers. And it's these areas that will get filled very quickly once you understand where the market's going. So let's have a look at how you draw out an imbalance zone. So we draw out an imbalance zone. Let's start from this high of this move to downside. We have an imbalance zone that we can mark off here like this. In between the low of this wick, let's go closer into price. So from the low of this wick to the high of this wick, there's our imbalance zone. We've left this area where there's no buyers currently in the market. Now, when we see the market come back to this area, we can see a strong push through. And again, we can actually mark off all of these areas here as areas of imbalances. And again, we can mark this level. It's a large imbalance left over here. And there's even a small imbalance left over here in the market. Let me just quickly briefly go through how we read the imbalances. So when we see the market here, we can see we have this price holding below. Remember, price is below a low here, previously on the chart overhead to the left. We have a previous low here. Now, more of that will come into the next step in this video. We can see the market pushes up, retests this imbalance. We wick through. Okay, we take a low at the same time. Now what we're seeing here again is what we call a manipulation in the market. And then the market here creates a push up. Again, we fail to close through this imbalance until this candle happens, which shows me that this balance has now been removed. And you can understand that once an imbalance has been filled or removed, we tend to go to the next area. And we can see this move up goes up to the 50% area, we move sideways, and then we push through, closing through that imbalance. Again, the next candle wicks through on this candle, we close through on the next one, and we remove that imbalance. Now, as price does this and continues up, we actually start to leave bullish imbalance here. We have an imbalance zone left over right here, and another imbalance zone is left over here in the market. Now, these zones are midway through this swing. What we're concerned about using in this step is to understand the origin of the move, the imbalance zone. And this is in fact the origin of the move. The origin of the move is going to be from the swing high of your trading range to the swing low. That is the origin of the move imbalance zone. This is important because if price can now close through this area, this tells me, and in fact, you can actually use a level as well. So you can just apply a level like this for your imbalance. Once price closes it, as we do there, this tells me this range is going to be taken. And you can see the market goes up and we take this range high. At the same time as we close through this imbalance. Now we can do the same thing. This is our trading range. Now when we see the market from here, this swing low continue to go up, we create a trading range to the upside, and this became my last area of imbalance. Just get this straight. So this is our imbalance zone now to the upside, and it's our origin of the trading range. So if price was to close back through this area from here and went back down, this puts us back in a bearish bias. So now looking back to the upside, can we see any areas of imbalance? Well, we had an imbalance zone here, but it was filled with a spike to the upside. Looking further to the left, we do have some imbalances here. Now, the last one was filled was this imbalance zone. And this is actually a better origin of the move, this larger zone, but we were filled. But we do have this area left over here. Now look, price closed through. This indicates to me that this trading range high is going to be removed. So we can mark off the trading range high, look to the left, price pulls back. Look where it comes back to retest this origin of this range. And we continue up to take this range high. Now, once we've gone through this range high, we can then look to the left and look for the next level. The next area is going to be here. This creates our last area of imbalance. After this origin of this previous swing high, we drop to the downside. Now there was one here as well, but you can see this was removed by this bullish move, and then price had to go back higher to take the top of this range, which it does. But at this point, we're actually selling with this trading range, but now we're buying with this trading range. That's why it's important to understand the range you're in. So at this point in the market, once we see the market close through here, this is our next area for imbalance level. For the origin of the move, we pull back, make a new higher low, and where does the market go to? To that previous imbalance. Now we haven't closed through this yet. Once we've closed through that imbalance, then I expect this high to be taken. If we move forward here, we can see price currently is now at this level once again. And to be honest, there was a nice trade here to be caught to the upside. Understanding the technique you're going to learn in the next section. Just remember, we apply the origin of the move. Once we understand the origin is taken, we know the swing high of that trading range will also be taken, putting us into a larger trading range. That's why these concepts work together. That's why there's 3-step hack in this video. You need to understand all 3 of them to be able to use it. So this is the concept of the origin of the move. So I hope you now understand why the use of the imbalance zone of the origin of the move with the use of a trading range is going to help you to mark up on your charts and find where price is likely to go next. Now, once you understand this process, it makes it much easier when you go over to step number 3, where we're going to go through next, to understand how to look for those reversals in the market and to find good quality trade setups to take a trade to the next area of imbalance. Let's head over now to the next step and the final step in this video. Remember, you need this step to make all of this come together. And this step is going to go through understanding the reversal strategy and also how you can use this to find great entries going forward. So let's now look at the final step. Again, let's remove everything off the charts. Now the final step is to find that reversal. Now, once you understand this reversal technique, it's going to help you to then start looking for those trade entries in the direction to that next origin of the move and the swing high. So first off, let's mark off this swing low that we have here of this trading range and this swing high. This is our trading range and the market started to come down. Now, once the market got below this area, we can start looking to see if the market's going to pull back and continue further to the downside, or if we're going to go back to the upside. Now, how we can judge this is by using the reversal technique I'm now going to show you. When the market comes down and creates this last area of imbalance at this level, we're looking for the market to show me a reversal. Now, the reversal happens once we see this close up here to the upside. Once we've closed above this, we see this market wick back down, creates a higher low, and closes back as a bullish candle. This then demonstrates to me the market wants to go higher. Now the next level would be to fill this imbalance. And you can see that's where the market went to. So this reversal pattern indicated to us that the market was going to go higher. Now it's best to wait for this trading range to be broken. And in fact, it's best to look for this area of the origin of the move to be broken as well, to then understand that the market is in fact in a bullish trend and we're going to be in a larger trading range. Once we've seen this close through, we can identify that the next area we're going to target is in fact this level. This would be our target using the origin of the move. And then we can also look to target the swing high of that trading range from this swing low to this swing high. So once we see the market here breaking above, we create a reversal, we drop back down. We're not interested at this point in selling the market, we're waiting for a buy. We've seen also here understanding the break of structure. We're going to break a structure at this point on the market. Now, if you're not sure on break of structure, there's a great video, which I'll leave above now, which goes through the use of the break of structure in the market. And you can identify when the market comes back down here, how we saw it to this left, we can use this reversal technique. And we can mark off from this low of this candle across. We can see it close down. Okay, this creates an area of imbalance. We then close straight back up on this candle. This demonstrates to me the market wants to go higher. Where are we going to go for? Well, we're going to go for this swing high because we're already closed through this level. So there's an entry looking for the market to pull back. We retest a great entry down here in a lower time frame. Now you could look for a target just at this high as you see the market went, or you can also incorporate the area of imbalance what's left over here. So on the way down, we create this imbalance. And you want to see this imbalance filled and closed through to understand that the market then wants to go for this swing high. You can see this happens on this candle. So once again, once the market has closed through here, you can look for another entry on the pullback here. And this is in fact another trade that I caught previously using this technique. Here we can capture another trade on the lower time frames targeting this area. Now that's a big risk to reward. Now I'm not going to go through the actual trade entries here. I'm just demonstrating you this reversal pattern, how you can look for those trades. Now again, the reversal pattern happens here. Once we close through, we create this pullback. We can mark off the low of this candle. We close down, we close back up. The market pulls back here, another entry. Now I can see straight away from here on a lower time frame, there's a manipulation and the market goes up to that target. And that's exactly how you can combine everything that you learned in this video. Again, the market pulls back after closing through that level. Where do we go next? Okay, we go to this area here to fill this imbalance at the origin of the move, and then we'll be looking at the market to go for this swing high as we went through previously. So now if we look back here, we can see the market comes up. Okay, this high is taken, we pull back. What do? Again, we use the reversal pattern. There's our reversal pattern, and the market comes back, retest, continues up to this high. This happens in one candle. There's then another entry here, which goes up to the high again. The market then pulls back, and just like we saw at the beginning of the move, we have the market pushing below this swing low, and again we create the reversal pattern. The market closes up there, retest, another nice entry to go for this previous high because we haven't yet closed through. You can see the markets then pull back again right here, creating for me another manipulation on the lower time frame. We drop down to a 30 here. Most probably going to be able to identify some swing point here, this swing low. Compared to this swing low, we manipulate through and we bullish move back up to this high again. Now what we're looking for is the market to try and push and close through this level. Once we can do that, we're looking for the market to go for this range high. Remember, we're within the range currently from this swing high to this swing low, and the market continues to go higher. That's how you can track price using every single step throughout this video. Now you have a great understanding exactly how you can apply the 3-step hack to start looking for those highly probability trades. Now, of course, if you still want some extra help for myself and to be part of a community which is growing continually to improve traders' ability to read the markets, then you'll want to check out the Forex Masterclass course. Now, there is a link below in the description of this video which goes through to the main website so you can learn more on that course. Now, of course, if you want that trader's advantage and start understanding those highly probability zones on the use of supply and demand, then you're going to want to check out this video right now and see exactly how it's done.